Most of us think of a life insurance policy as this locked box. You put money into it for years, and it pretty much only opens up when you're gone. But what if I told you it's actually more like a Swiss Army knife, full of hidden tools you can use while you're still around? Today, we're going to pry that box open and discover its secret superpowers. So here's the big question, right? Life is messy. It's constantly changing. You hit financial bumps, your family grows, your health shifts. Can your policy actually keep up with all that? Well, the answer, surprisingly, is yes. Turns out a lot of policies have these amazing, flexible features kind of built right in. We're about to show you how to find them and, more importantly, how to use them.
All right, so to really see how this works, let's start with our first case study. Let's meet Daniel. He's facing a situation that honestly could happen to any of us.
Okay, so here's Daniel. He's 45, he's been doing the responsible thing, paying into his whole life policy for years, and he's built up a pretty solid 25 grand in cash value. But life happens, and there it is. That's his dilemma. He just can't keep up with the premiums right now. But the idea of just walking away and losing all that hard-earned money, that feels terrible. I mean, that's a really tough spot to be in. So what's the move here? Is he just stuck? Is there some secret third option where he can stop paying but still keep his coverage? Believe it or not, there is. The answer is hiding in a feature called a non-forfeiture option. For Daniel, the absolute best tool on the toolkit is something called reduced paid-up insurance. Now, this is one of those superpowers we were talking about. It's designed for this exact kind of financial emergency. Okay, so what does that actually mean for Daniel? It means he can take that $25,000 in cash value he's built up and use it as a one-time payment to buy a new, smaller policy. And here's the magic part. It's completely paid up. No more premiums, ever. He gets to keep life insurance coverage for the rest of his life without paying another cent. It's the policy adapting to his problem instead of him losing everything because of it. So that's how you can deal with a problem that's happening right now. But what about planning for things that might happen way down the road? For that, let's meet Mia. She's thinking ahead.
So here's Mia. She's 39, she's just gotten a new universal life policy, which is known for its flexibility, and she's already thinking about the future. This is such a smart question to ask. I mean, her health is great today, but who knows what it'll be like in 15 or 20 years. If something changes, trying to get more insurance could be impossible, or at least crazy expensive. She wants to lock in her good health status while she can.
For Mia, the perfect tool is a little add-on called a guaranteed insurability rider. Think of this like buying an upgrade for your policy when you first get it, one that gives you a ton of power later on. This rider is incredible. What it does is it gives Mia the absolute right to buy more life insurance on certain dates in the future, and here's the key, without having to answer a single medical question or take another exam. It's like a VIP pass to future coverage no matter what her health looks like then. It's a total game changer for long-term planning. Okay, so we've covered handling a crisis in the present and planning for your own future. But our last case study looks even further ahead. It's about the legacy you leave behind. Let's meet Joseph.
So Joseph is 51, and he's not just thinking about himself anymore. He's really focused on his daughter. He wants to make sure that the money he eventually leaves for her provides genuine, lasting security.
And this is a very common worry. He knows that getting a huge check all at once can be really overwhelming. It can be spent too fast. His goal isn't just to give her a pile of cash, it's to give her a foundation of financial stability that lasts a lifetime. To make that happen, Joseph has a fantastic tool at his disposal. It's a choice he can make about the payout called the life income option. This is so powerful. Instead of the insurance company cutting his daughter a single massive check, they will instead pay her a guaranteed amount of money every single month or every year for as long as she lives. He is essentially turning his death benefit into a private, lifelong pension for her. And you can see the huge impact of this choice. It provides that guaranteed income, which is amazing. But more than that, it protects her from the pressure of managing a big lump sum. It creates this true financial safety net. It's not just about the money.
It's about providing lasting peace of mind. It's the exact stability Joseph wanted for her.
All right. We've just walked through 3 very different people solving 3 very different problems. Now, let's zoom out and put all these pieces together. Let's organize these solutions so you can see the hidden toolkit in your own policy. So, when you boil it all down, you've basically got 3 main types of tools. First, you have non-forfeiture options. These are for you, the policyholder, for when you need to stop paying, just like Daniel. Second, you have riders. These are also for you, but you use them to add new powers to an active policy, like Mia did. And finally, you have settlement options. These are for your beneficiary, letting you plan exactly how they get the payout, just like Joseph did for his daughter.
Now, let's just focus on the 2 that people mix up the most: non-forfeiture options and riders. It's actually super simple. A non-forfeiture option is what you use when you stop paying. It's a way to rescue the value you've already built. A rider, on the other hand, is an upgrade you buy while the policy is still active, to give it new tricks. Stop versus active. That's it. That's the core difference you got to remember. And that right there is the big idea we want you to leave with. Your life insurance policy isn't just some dusty document sitting in a drawer. It is a living, breathing, powerful financial toolkit. It's designed to be used, to be adapted, and to help you navigate some of life's biggest changes.
Which, of course, leaves us with one last question. And this one's for you. You've now seen the toolkit. You know about the options to stop paying, the riders to add features, and the settlement options to plan a legacy. Chances are, at least some of these superpowers are already hiding in your own policy right now. The only question is, what are you going to do with them? Thanks for joining us.